Welcome back to the Vault Trading channel. In this TA101 series, I'll be guiding you through the fundamentals of charting in a way that is short, simple, and straight to the point. Today we'll be starting with support and resistance, the foundation of every trading setup. Let's go. The reason we call these lines support and resistance levels is because they are high volume trading zones where a lot of buying and selling is happening. Depending on where your price is, that area can flip between support or resistance. So let's look at this chart for example. We are currently at this price at the 1.117 price zone. Any lines below the current price is called support levels, and any lines above the current price are resistance levels, like this line and this line. Think of support as a floor where the price stops falling when buyers step in and push the price up, and resistance as the ceiling where price stops rising, where sellers take profit and push the price down. So price tend to move within these two zones repeatedly until one side finally breaks. To provide an example and more clarity, imagine price ranges within this support and resistance range, and it breaks through this resistance, and the current price action is sitting on the 1.309 region. These previous resistance have now flipped to support. The line above is still a resistance level, the line below is still a support level. So in simplicity, any lines below the current price action is support, and any lines above is resistance. Now let's learn to draw support and resistance levels the right way. Step 1. Always start from higher time frames. Begin with the monthly, the weekly, then the daily. The higher the time frame, the stronger the level. Monthly levels are your major trend zones. Weekly level are your medium-term reaction zones. And daily levels are your short-term trade zones. When you are drawing your support and resistance lines, always focus on the most recent price action. That's where the market is currently reacting. Focus on any peaks, which is the swing high, or the valley, which is the swing low of candle bodies, not the wicks. Candle bodies show where most of the buying and selling is actually happening. So a pro tip, if you're using TradingView, just press alternate H to have a horizontal line out. You can use different colors for each time frame. For me, I use blue for monthly, green for weekly, and red for daily. So your chart stays clean and easy to read. So I set the monthly support here. If the current candle is still forming, like this candle on the monthly, do not draw a support and resistance line based on this candle yet. Wait for the candle to close. Only confirmed candle give reliable structure for levels. So I do not draw a line here because this candle is still forming. So for the valley, this is the only support line I'll draw. For the peak, I will not draw a resistance line here because the candle hasn't been completed. Will I draw a resistance line here? Here's an important tip. If you see a long wick sticking out in front of a candle, don't draw your support or resistance line there, because that wick shows that the market has already grabbed liquidity in the area. In simple terms, the buy or sell orders around that level has already been triggered. Once that happens, the level becomes weaker and it's easier for price to break through the next time. So instead, draw your lines at fresh level, places where price haven't spiked through yet. That's where the big reaction is more likely to happen. So for this pick, because this has grabbed liquidity, there will be no resistance line, and same for here because liquidity has already been taken, and same for here, price action already moved past this zone. So on the monthly time frame, this is the only support line I'll be drawing. So if you look closely here, the wick didn't touch the line here, so this support line is still valid. Let's look at the weekly right now. On the weekly time frame, just a pro tip, if you're using TradingView, you can hold Control, click on the line and drag it. You can have another line and you can set it to your weekly, and I'll draw the lines quickly. This candle is not formed yet, so I will not draw a line here, but here is one. I will not draw a line here because liquidity has already been taken away here. Here too. And these are the support and resistance line in the weekly time frame. Moving on quickly to the daily time frame. I will not draw a line here because the wick in front has already tapped the zone. This is a strong resistance zone because of the weekly and daily. Draw a line above here. So all in all, this is how to draw a support and resistance line for your charts. Now that your levels are all set, here's the key question on how we can trade based off these lines. Scenario 1 is reversal trade. So on this daily time frame on the Solana chart, you can see that price is coming down and there's a support line here. So what we do is we'll set a limit long order at this support line and we set a stop loss just below. So we'll see how it plays out. And here's the current price action. This is still forming and we believe that you can go higher. Here's another example on the smaller term time frame. It's a 15 minutes time frame. We have a support line here and price action is coming down. Let's see how price reacts to this. You can see price action taps here and goes back up. This shows that the support is still valid. Now let's talk about scenario 2, which is the breakout trade. Because we know that as price action taps more times on a certain support resistance level, it becomes weaker and eventually it breaks. So if you're expecting a certain zone to break, wait for the price to close below this support with momentum before entering the trade. Don't jump in immediately. Wait for the retest of this level. If it holds, it's a confirmation to enter. So for example, this Esther chart, there's a support line, we're expecting it to break. We wait for the retest before we enter. Let's see how it plays out. So you can see price action breaks down, retested. This is your zone to enter for a short trade with a stop loss above the previous highs, and we can see that price action went lower. This is how you trade a breakout trade. In summary, support and resistance are your first steps to reading the market like a pro. Always start with higher time frames and trade with confirmation, not emotion. If you are looking for a platform with zero fees and an upcoming airdrop, Paradox is the pop dex of choice for active traders. But if you prefer a centralized exchange to buy and hold your spot DEX while trading futures with excellent fees, OKX is the way to go. You'll find both links in my description below. In the next episode of the Vault TA101, we'll dive into market structure, how to spot trend and structure early. If you have found this helpful, drop a like, subscribe, and share it so that more new traders can learn the right way to trade. This is the Vault Trading Channel, TA101, where we learn and earn together.
Welcome to the vault. This is where we flip. Alpha in the code. Never use my grip from the floor to the moon. That's a one-way trip. We don't follow hype. We make the script.